Hi, folks. This is Lee Gettess with the Market Sense for the week of April 24th, 2012. Market Sense. That's as if they ever make sense. The charts we use come from the Trade Navigator software from Gettess, and the first chart we'll look at is our weekly bond chart. And you can see, even though bonds have turned up nicely and been going up rather steadily for the last few weeks, the volatility is shrinking tremendously. The weekly ranges are down substantially. This blue line here is in the mid 142 range. Let's call it 142.16 to 20. And they've been up above it this week, but then turned and come back down below it. Now, the normal support you would expect them to hold even in an uptrending move is 141.16, and they haven't even gotten down to that yet. And even the green line down here at 140.20 would just kind of look like a normal place to find support if they were to continue the move up. Uh, the fact that they're backing off doesn't really mean that they're turning down yet, but they certainly could, because after this breakdown here, the move back up has simply got them back into the middle of this long-term sideways pattern that they had going way back into last year. And so going back into that pattern, certainly a turn down to retest this low, or at least a 50% retracement, would make some sense. So they could be turning back down from here, but at this point we just don't know. And we're looking at a big FOMC, a two-day FOMC meeting this week that will climax with a press conference from Ben Bernanke where they'll be hanging on the poor guy's every syllable. So very difficult to figure out what might be happening here, but they say interest rates are going to be down until 2014 at least, so you wouldn't expect them to really plunge at any point here. Now in stocks, we have a somewhat of a frustrating situation, at least for me. They had just a 1 week breakdown after this severe uptrend that lasted months, and one bar down and then one bar back up. That should have been really good, and except they turned back down again. Now turning back down again should have been really bad, except they didn't make new lows. At least they haven't yet, and now it looks like they've sort of retested and made a double bottom here, which would suggest that we should at least see them back up to the 1380 area, and quite possibly 1400, or even back up testing the highs around 1420. If they do turn lower, and I really thought they were going to turn lower, I'm surprised they've bounced this hard. I didn't think this previous swing low would hold. I thought they'd at least go down to the 1335 area here, and again, they still could. We still have who knows what coming out of Ben Bernanke's mouth that could drive them down. And of course, there's still concerns about what's going on in Europe. And it's just a very difficult situation. But in the last 2 weeks, intraday, I think the market has changed from bullish to bearish at least 5 times. It's like a weather vane. It just can't seem to make up its mind. So I'm kind of waiting for all this to play out till I see what's going on. But at this point, you have to look at them as if they have tested this low and held it. So 1380, 1400, or even up to new highs is what we got to look at, unless they turn down. So that's what we've got for you today. I sure hope you can do a better job than I am and get something profitable for yourself. But thanks for looking to see what we think.